Hi, this is Ben Hart for BitcoinInstitute.net. I'm here to address the question, is Bitcoin irreparably damaged by all the multi-billion-dollar scams we've seen this past year? Most recently, the collapse of Sam Bankman-Fried. The short answer is no. In fact, all these scams in the world of crypto is yet another illustration of the truth that Bitcoin has nothing in common with the rest of the crypto world. Bitcoin is a one-of-a-kind asset. Unfortunately, the media just calls it all crypto, including Bitcoin. The latest crash in the crypto market was triggered by the collapse of the world's second biggest crypto exchange, called FTX. This was an exchange founded and run by a fellow named Sam Bankman-Fried. More on him in a moment, because it turns out that Sam Bankman-Fried was running what appears to be an even bigger Ponzi scheme than Bernie Madoff. Now, whether he ends up in prison or not will be for the courts to decide. Everyone deserves a fair trial. I should also remind everyone here that I have written an entire book on why Bitcoin is not crypto and is not blockchain. There is nothing special about blockchain. Blockchain can be used in a centralized way or a decentralized way. Blockchain is used by banks and e-commerce sites to secure their networks. There's nothing special about these technologies. Bitcoin is trying to be one and only one thing: honest, decentralized money that can't be corrupted by humans. Humans are prone to corruption and greed. Bitcoin is governed by math, not by people, so it can't be corrupted. Bitcoin is the only truly decentralized cryptocurrency or asset. Bitcoin is a synchronized ledger distributed about every 10 minutes to more than 1 million computers or nodes around the world. This happens all automatically, robotically. No one owns Bitcoin. No one controls Bitcoin. If it turns out that Satoshi is still alive, even he could not change Bitcoin. There is no backdoor. Bitcoin is open source software that anyone can just copy and paste. Make a few tweaks to launch a new coin. And many have tried this. You could say the same about Facebook. Anyone could just copy Facebook's code and structure and try to compete with Facebook. But that wouldn't work because what you can't replicate is Facebook's network of 2 billion users. As of now, Bitcoin has 180 million users. Bitcoin's network of more than 1 million miners and nodes, validating transactions and maintaining and protecting the network is what's so difficult to replicate. Bitcoin is the only money that hasn't been issued by a government or by a corporation. And Bitcoin has never been hacked. Yes, people have lost their Bitcoin because their private keys were stolen off an exchange or off their laptop computer, because they didn't properly secure their Bitcoin keys. That was human error or human folly. But Bitcoin's underlying technology has never been hacked. In fact, let's just quickly review how dominant Bitcoin is in the so-called crypto space. The media often talks about Bitcoin dominance in the crypto world. If Bitcoin dominance hits 50% of the market, of the crypto market, the media says that's good for Bitcoin. But if Bitcoin dominance drops below 40%, we're told that's bad for Bitcoin. Bitcoin dominance tends to drop during bubbles, as speculators try for the bigger gains, with the so-called altcoins. Altcoins are crypto assets other than Bitcoin, but that are not stable coins. During manic altcoin buying bubble peaks, Bitcoin dominance drops as the casino gamblers jump into the market right before the blow-off top. These are the retail casino gamblers who rush into the altcoin market near the peak, only to be slaughtered, like in Silence of the Lambs. When the overall crypto market drops, Bitcoin's price drops too, but not nearly as much as the so-called altcoins. Now, the media often lumps Bitcoin in with the more than 20,000 other crypto assets out there. These include gaming tokens, art auctions, NFTs, scammy lending platforms, online gambling, lotteries, and all kinds of garbage. If we include all 20,000 cryptos, Bitcoin accounts for about 42% of the market. But that's not the correct way to measure Bitcoin. Correctly measured, Bitcoin is about 95% of the market. Of the 20,000 cryptos out there, I count 9 coins that are actually trying to compete with Bitcoin as a decentralized money. that uses a proof-of-work consensus protocol. The proof-of-work consensus protocol is the only way to create a decentralized transaction validation structure. And it's the only way to secure a decentralized monetary network, as I explain in other videos. If the money is not automated, if it's not decentralized, if the governance of the money is not decentralized, if money is controlled by a small group, then it can't be honest money. It's fiat money. It's confetti money that will be debased to zero over time, as happens with all fiat currencies. Satoshi found a way to remove humans from the money system, to automate the money system with fixed rules. The most important rule being there will never be more than 21 million bitcoins. If we exclude venture capital projects with initial coin offerings or ICOs, and if we exclude stablecoins and proof of stake or other centralized projects, Bitcoin is 95% of the cryptocurrency market, because the others don't even purport to be currencies. The only 9 coins even claiming to compete with Bitcoin as honest money are Litecoin, Bitcoin Satoshi Vision, Bitcoin Cash, Monero, Dash, Zcash, Bitcoin Gold, Dogecoin, and Decred. I exclude Ethereum from this list of competitors to Bitcoin because, 1, Ethereum is not trying to be money. It's trying to be a decentralized internet for decentralized applications, such as gaming, art auctions, and so-called decentralized finance, or DeFi, which doesn't exist. 2, Ethereum has transitioned from a proof-of-work to a proof-of-stake system, which makes it even more centralized. 3, Ethereum has always been a centralized project from inception. 4, Ethereum was launched with venture capital and an initial coin offering, which is like a public stock offering. 5, there was a massive pre-mine prior to Ethereum's ICO, in which upwards of 60% of today's supply was only available to a small circle of founders. 6, Ethereum has always been under the control of its creator, Vitalik Buterin, so it doesn't qualify as immutable money with a fixed set of rules. Ethereum is a dictatorship of one. 7, Ethereum's rules are a moving target, constantly changing. 8, no one knows how many Ether coins exist. 9, Ethereum cannot be audited. So Ethereum in no way qualifies as money. It's not trying to be money. We also exclude stablecoins as a competitor to Bitcoin because stablecoins are just tokens pegged to the value of the dollar or fiat currency, similar to casino chips. So stablecoins are really just an extension of the fiat currency system. So once we narrow down the field to projects that are actually attempting to compete with Bitcoin as honest, decentralized money with a fixed set of rules, Bitcoin is 95% of the cryptocurrency market. The aforementioned 9 currencies that qualify as competitors to Bitcoin are all attempting to be faster versions of Bitcoin. Dogecoin was actually started as a joke in 2013 as a parody of Bitcoin to show that anyone can create digital money. And that's true. Anyone can. It's open source code. Anyone can just copy and paste the Bitcoin code. Anyone can then tweak the code and see if they can improve it. The market has told us that no one's been able to improve on Bitcoin. A secure proof-of-work network requires an enormous network of miners who are expending vast amounts of computing power to guess a difficult number and process transactions. The miners and nodes are the guardians of the network. It's this vast network of 180 million Bitcoin users and 1 million miners and nodes growing every day that makes Bitcoin valuable. It also makes it very difficult, if not impossible, to compete with. Okay, so Bitcoin is actually 95% of the market that's trying to be automated, decentralized digital money that's not owned or controlled by anyone or any small group. But unfortunately, Bitcoin gets tarnished in the public's mind by the Sam Bankman-Frieds of the world. Sam Bankman-Fried, or SBF, tanked the entire crypto market over the past few weeks, including Bitcoin, with his Ponzi scheme, with his scam. Bitcoin has been affected less than the rest of crypto world But Bitcoin has certainly been affected negatively by this, by Sam Bankman-Fried. So who is this Sam Bankman-Fried character anyway? And what has he done? Well, Bankman-Fried is young. He's 30 years old. He was born in 1992 near Stanford University. His parents are professors at Stanford Law School. He's a smart guy. He went to MIT where he majored in physics and minored in mathematics. Bankman-Fried made his first $1 billion in 2018 by taking advantage of an arbitrage situation. Nothing wrong with that, by the way. The price of Bitcoin back then in Japan was higher than the price of Bitcoin in the United States. So Bankman-Fried spotted this. He bought Bitcoin in the United States, and he could sell it for more in Japan. And he was apparently moving about $25 million in Bitcoin per day during this period to take advantage of this arbitrage situation. And there's nothing wrong or illegal about making money this way. There are, however, some questions as to where he got all this money. To make $1 billion in a year in an arbitrage operation requires a lot of capital. But that's the story. So Bankman-Fried became a billionaire at age 27. Then in 2019, he moved to Hong Kong to start a cryptocurrency exchange called FTX. He also started a hedge fund called Alameda Research. I assume he did this, moved to Hong Kong, in order to skirt U.S. laws governing exchanges and governing financial products. Why else would he do this? What Alameda Research did was buy crypto assets and create crypto tokens. Bankman-Fried's exchange, FTX, then marketed these tokens and coins. So here's what appears to be the scam in broad outline form. And I'm just gathering this from news accounts, so some details here might be a little off. Do your own research. I'm also simplifying this drastically. And I'm only going to talk about his two main companies, Alameda Research, that's his crypto hedge fund, and FTX, that's the exchange. The financial press reports that he had upwards of 130 affiliated companies. I don't know why you would need 130 affiliated companies, but that's what he had. So what his Alameda hedge fund would do is buy garbage digital assets and tokens, vaporware basically. These garbage tokens would then be hyped by Bankman-Fried's exchange, FTX. His Alameda hedge fund and market maker would set the price for these garbage tokens. And because there was no volume for these garbage tokens, Bankman-Fried and his friends could easily bid up the price. Just like at an auction where you have fake bidders, called shill bidders, to bid up the price. This is illegal in auctions. At least it's illegal in the United States. I don't know if this is illegal in financial markets. The market would then notice the price of these tokens going up because Bankman-Fried and his cronies were artificially bidding up the price. Shill bidding. Suckers would then jump in and buy them. And apparently a lot of them did. Remember, the trading volume for these garbage tokens, this vaporware, was very low. So it's very easy for someone like Bankman-Fried and his cronies, he is a billionaire, to bid up the price of these garbage tokens to stratospheric heights and in a coordinated way. At a certain point, the market FOMOs in, FOMO, fear of missing out. At a certain point, the market FOMOs in and buys near the blow-off top, near the peak. At peak FOMO, Bankman-Fried would dump all of his tokens, leaving retail investors holding the bag. Bankman-Fried and his group would then pocket the dough. So by doing this, Bankman-Fried achieved an estimated net worth of $26 billion by age 30 in just about 3 years. That is by March of 2022. Here's Sam Bankman-Fried explaining how his business works. This interview with Bloomberg's Matthew Levine was about 6 months before Bankman-Fried's collapse.
Where'd you start? You start with a company that builds a box. And in practice, this box, they probably dress it up to look like a life-changing, world-altering protocol that's going to replace all the big banks in 38 days or whatever. Maybe for now, actually ignore what it does or pretend it does literally nothing. It's just a box. So what this protocol is, it's called Protocol X. It's a box, and you can take a token, you can take Ethereum, you can put it in the box, and you can take it out of the box. Like you put it into the box, and you get an IOU for having put it in the box, and then you can redeem that IOU back out for the token. So far what we've described is the world's dumbest ETF or ADR or something like that. It doesn't do anything. But let you put things in it if you so chose. And then this protocol issues a token. We'll call it whatever, X token. And of course, so far we haven't exactly given a compelling reason for why there ever would be any proceeds from this box. And then you say, all right, well, you got this box and you got X token. And the box protocol declares that what they're going to do is they are going to take half of all the X tokens that will have reminted, maybe two-thirds though. Two-thirds will have for X tokens. And they're going to give them away for free to everyone who uses the box. That's, for now, what X token does. It gets given away to the box people. And now what happens? Well, X token has some market cap, right? It's probably not zero. And a bunch of arbitrageurs
from like first principles, it should be zero, but okay.
Sure. Okay. I completely reasonable comment. Describe it this way. You might think, for instance, that in like 5 minutes with an internet connection, you could create such a box and such a token, and that it should reflect like, it should be worth like $180 or something market cap for like that, that effort that you put into it. In the world that we're in, if you do this, everyone's going to be like, ooh, box token. Maybe it's cool. If you bought any box token, that's going to appear on Twitter and it'll have a $20 million market cap. But I acknowledge that it's not totally clear that this thing should have market cap. But empirically, I claim it would have market cap.
I agree.
It shouldn't have any market cap in theory, but in practice, they always do. Okay.
That's right. So, and obviously already we're sort of hiding some of the magic in that, right? Like some of the magic is in like, how do you get that market cap to start with? But, whatever. We're going to move on from that for a second. So, X tokens being given out each day. All these like sophisticated firms are like, that's interesting. Like if the total amount of money in the box is $100 million, then it's going to yield $16 million this year in X tokens being given out for it. That's a 16% return. That's pretty good. We'll put a little bit more in, right? And maybe that happens until there are $200 million in the box. So, sophisticated traders and or people on crypto Twitter or other sort of similar parties go and put $200 million in the box collectively, and they start getting these X tokens for it, right? And now all of a sudden everyone's like, wow, people just decide to put $200 million in the box. This is a pretty cool box, right? Like this is a valuable box, as demonstrated by all the money that people have apparently decided should be in the box. And who are we to say that they're wrong about that? Like, this is, I mean, boxes can be great. Look, I love boxes as much as the next guy, right? And so what happens now, all of a sudden people are kind of recalibrating. They're like, well, $20 million, that's it? Like that market cap for this box? And it's been like 48 hours and it already has $200 million, including from like sophisticated players in it. And so then, X token price goes way up and now it's a $130 million market cap token because of, the bullishness of people's usage of the box. And now all of a sudden, of course, the smart money, it's like, oh, wow, like this thing's now yielding like 60% a year in X tokens. Of course, I'll take my 60% yield, right? So they pour another $300 million in the box and you get a cycle and then it goes to infinity.
I think of myself as like a fairly cynical person. And that was so much more cynical than how I would have described farming. Like, you're just like, well, I'm in the Ponzi business and it's pretty good.
At no point did any of this require any sort of like economic case. It's just like other people put money in the box and so I'm going to too. And then it's more valuable. So they're going to put more money in. And at no point in the cycle did it seem to like describe any sort of like economic purpose.
So this is how Bankman-Fried amassed his personal fortune of $26 billion in just 3 or 4 years. Okay, now let's see how this pump and dump operation worked. We'll just look at some of his tokens at random. Here's something called Eden. FTX's posting on Twitter says it's a new offering. SBF shill bidders bid up the price from near $0 to a $100 million market cap. Market herd mentality then pours in. Then SBF dumps his bag near the top right here. Here's something called the Guild of Guardian token. I've never heard of these tokens. Here you can see this goes from near zero to a $180 million market cap in a matter of days. Then SBF and his cronies dump their coins here. Here's something called Render token. I have no clue what this is. I have no clue what any of these things are. Same thing. Went from near zero to a $1.3 billion market cap very quickly. Looks like this might have been a double pump. He pumped here, probably dumped some, then pumped it bigly here, then dumped here. There are dozens and dozens of these garbage tokens on FTX. Now, the problem for Bankman-Fried was that someone leaked Alameda Research's balance sheet to the media, specifically to CoinDesk. Remember, Alameda Research was his hedge fund, his market maker. And the balance sheet showed that the bulk of Alameda's assets consisted of a token created by Alameda Research called FTT, that is, created by Bankman-Fried or his group. So these were just tokens that Alameda Research could print up. Smart people saw this, including the CEO of Binance, the world's largest crypto exchange. The founder, the CEO of Binance, is a fellow named Changpeng Zhao, also known as CZ. And CZ is from China. So what appears to have happened is CZ shorted Bankman-Fried's FTT garbage token, then announced on Twitter that his firm intended to sell all of its holdings of FTT, that is, Bankman-Fried's garbage token. This announcement by CZ on Twitter caused the collapse of FTT, which then triggered margin calls on Bankman-Fried. Bankman-Fried's garbage FTT token then plummeted from $77 to around $2. Soon after that, Bankman-Fried's exchange, FTX, which was the second largest crypto exchange in the world, filed for bankruptcy. Bankman-Fried's net worth then dropped from about $26 billion to a negative net worth, apparently, according to reports. And according to news reports, where Bankman-Fried is likely in real legal trouble is where he might have used, and apparently did use, billions of dollars of customer funds on his FTX exchange to cover margin calls over at his Alameda hedge fund due to the collapse of his FTT garbage token. It's also possible and quite likely that he misrepresented the actual assets at his Alameda hedge fund. If the bulk of his assets amounted to simply digital tokens that he created out of thin air called FTT. So this would be like you or me writing a note on a piece of paper saying that this piece of paper is worth X billions of dollars, and then representing this to creditors and banks and people lending you money for the purpose of collateral, saying he's worth all this money. Now, why anybody would believe that Sam Bankman-Fried had these assets without actually conducting due diligence, looking at his financials, figuring out what he has on his balance sheet, and why they would give him credit based on just his representations is anyone's guess. An anonymous source cited by the Wall Street Journal says that Alameda Research owed FTX about $10 billion, which were secured by customer deposits on the exchange. So maybe he took about $10 billion worth of his customers' money. So maybe $4 billion, maybe $10 billion, we don't really know. But it was a lot, and it was enough to create cause the collapse of the entire crypto market and put Bankman-Fried out of business. So all the customers' money is gone now. In fact, Dave Portnoy on Twitter was asking the question, if my Bitcoin is on FTX, does that mean it's gone? He was wondering if he could still get it, that if the private keys were somewhere. And I would say, no, that means you cannot get your Bitcoin because Bankman-Fried probably used it as collateral for his Ponzi scheme. So that would be my guess. So no, you can't get your money back if it was on Bankman-Fried's exchange. He took the money. Well, actually, CZ now has the money because he shorted it and got the money from Bankman-Fried. So that's too bad for Dave Portnoy. I hope he didn't have a lot of money on FTX. It's too bad for anybody that had money on FTX. A lot of people have been hurt by Bankman-Fried's fraud. Reports are that Tom Brady and his wife, now ex-wife Giselle, had assets tied up with Bankman-Fried.
A trade? Are you sure? Not a trade. I'm trading crypto. FTX is the safest and easiest way to buy and sell crypto. It's the best way to get in the game. Just trading crypto.
Sam?
This is relevant because apparently Tom Brady put his $650 million fortune into FTX. It looks like he'll be playing football for a while to make up for that.
So whatever money they had with Bankman-Fried is also gone. And here was the CEO of Alameda Research, Bankman-Fried's girlfriend.
We tend not to have things like stop losses. I think those aren't necessarily a great risk management tool. I'm trying to think of a good example of a trade where I've lost a ton of money. Well, I don't know. I probably don't want to go into specifics too much with that.
Bankman-Fried also happens to be the second biggest donor to the Democrat Party. He pumped at least $40 billion into the Democrat Party to spend on shadowy get-out-the-vote and other shady ballot harvesting operations for the 2022 midterm elections. Bankman-Fried's mom is a law professor at Stanford. Her name is Barbara Fried. She is the co-founder of a far-left political action committee called Mind the Gap, which has raised a reported $150 million to help Democrats win elections. Bankman-Fried also spent $10 million to get Joe Biden elected in 2020. That's a lot of money for a 27-year-old. My guess is we're just seeing the tip of the iceberg of the corruption. Now, what does this have to do with Bitcoin? Well, actually, nothing. Absolutely nothing. Except that all this negative press about the crypto world took the price of Bitcoin from $21,000 a coin down to around $15,000 at one point. But Bitcoin has nothing to do with Bankman-Fried, has nothing actually to do with the rest of the crypto world. We have nothing in common with the rest of the crypto world. We want nothing to do with the rest of the crypto world. We're not all in this together, as the altcoiners often say. The Bankman-Fried scandal actually just further validates Bitcoin and underscores how Bitcoin is so different from the rest of the crypto world. Remember what the Bankman-Fried scandal involves. It involves a shady exchange and a shady hedge fund and a fellow named Sam Bankman-Fried, who was too clever by half and ended up hoisting himself on his own petard. The implosion of Sam Bankman-Fried was entirely foreseeable, similar to the collapse of Luna Terra in May of 2022, just 6 months or so ago. Now let's do a quick recap of that scandal just so you can see the pattern. A crypto scammer by the name of Do Kwon from South Korea, age 30, cost investors about $40 billion in the span of a few hours in May of 2022, when his algorithmic stablecoin, USDT, collapsed. $40 billion gone. Poof. Kwon's so-called stablecoin was called UST and was supposed to be pegged to the dollar. It relied on an automated smart contracts algorithm to maintain UST's peg to the dollar. This UST stablecoin was backed by another coin that Kwon created called Luna. He called buyers of his Luna coin lunatics on Twitter. So yes, you heard that right. A crypto token that Kwon created, just printed up, just made, called Luna, was the collateral for his stablecoin. A stablecoin that is pegged to the dollar is supposed to be backed up by actual dollars, but in Kwon's case, his stablecoin pegged to the dollar, yes, but not backed up by dollars one-to-one or U.S. treasuries or anything like that. His stablecoin was backed up by the coin that he created, Luna. So under this algorithm, the supply of Luna, that is the coin that Kwon created, would fluctuate to maintain UST's peg to the dollar. If UST's price drops below $1, more Luna coins would be created by the algorithm, by the software. If UST's price rose above $1, Luna coins would be burned, destroyed. To attract investors, Kwon's lending protocol, called Anchor, offered 20% annual interest rates to investors. Now, anytime an entity is promising you a guaranteed 20% yearly return on your money, just assume it's a scam. No further study needed. You can stop your research at that point. Well, very predictably, it appears that some big investors started getting the sense that something was amiss, so started selling their Luna coins. Or perhaps some big whales or hedge funds out there saw what was going on, so started massively shorting the Luna coin to drive the price down. Or perhaps this was a planned pump and dump scheme all along, a rug pull. But the result of the collapsing price of Luna is Kwon's UST stablecoin lost its peg to the dollar and started crashing too. To maintain UST's peg to the dollar, the algorithm automatically created new Luna coins at tornado speed. In less than 24 hours, the supply of Luna tokens increased from 300 million to 7 trillion coins. The price of the Luna coin then quickly plunged from a high of $116 a coin to zero. Quan's so-called stablecoin also crashed to zero. See the pattern? It also turns out that this is the second time that Do Kwon did this. In 2020, Kwon launched another failed algorithmic stablecoin called Basic Cash. That coin failed in January of 2021. Basic Cash worked the same way as his most recent UST Luna stablecoin scam, involving two linked tokens. Basic Cash was supposed to remain pegged to the dollar. That's what a stablecoin is. The second coin that fluctuated in value was called Basis Share, or BS. The algorithm increased the supply of BS and burned BS to keep the basic cash price stable, to keep it pegged to the dollar. Yes, that's right. Kwon's stablecoin was literally collateralized by a token that he created, printed up, called BS. Kwon must have had a great sense of humor. So in December of 2020, Kwon's BS coin, his BS token, hit a market cap peak of $52.5 million, or $945 per coin. Today, actually that coin's still trading today. Today, that coin is trading at 0.0060. So yeah, it's dropped from a $945 a coin to 0.0060. Do Kwon now appears to be in hiding, though he's tweeting all the time on Twitter. South Korean authorities are searching for him, and Interpol has issued an international arrest warrant. But Kwon keeps tweeting, and he says he's not in hiding. He says people can come and see him anytime they want. But there's these warrants, and South Korea authorities are searching for him. Apparently his last sighting was in Singapore or something. So Kwon keeps tweeting. He says he's not in hiding. He says he's claiming, quote, he says, I'm claiming sovereign immunity. I'm claiming sovereign immunity. So that's what he's claiming. And while on the lam, while he's in hiding, while he can't be found, he has actually launched another crypto project that he's calling Terra Rebirth. Remember his previous platform, his previous company was called Terra Labs. Now he's launched Terra Rebirth, which is being hyped by Binance. Remember Binance, the world's largest crypto exchange that's run by China's CZ, who took down Bankman-Fried. So now what about Binance? Is that a scam too? Is Binance a scam? Well, I don't know. This is an exchange that was founded and run by CZ, and he's from China. CZ launched Binance in China in 2017, so just a few years ago. And it's now headquartered in the Cayman Islands. In 2021, the U.S. Justice Department and IRS announced investigations into Binance on allegations of money laundering and tax evasion. Binance is not allowed to operate in the United States. And at least according to Reuters, Binance shares client data with the Russian government. Reuters also reports that Binance has been an important vehicle for helping Vladimir Putin finance his war on Ukraine. So I guess we can thank CZ for spotting the problem on Bankman-Fried's balance sheet and collapsing Bankman-Fried into a puddle of tears, so that's good. Not good are all of Bankman-Fried's victims, but good that Frank Bankman-Fried wasn't able to victimize anyone else and wasn't able to become a sort of a too big to fail situation. But I assure you that CZ did not collapse Bankman-Fried out of noble motives. He saw an opportunity and he pounced. He's smart. He can do math. So these are the kinds of folks you're dealing with in the so-called altcoin market, in the so-called crypto space. And none of these people have anything to do with Bitcoin. The whole point of Bitcoin is to remove humans from the money, because humans are greedy and they're corrupt. That's the problem that Bitcoin set out to solve. Get humans out of the money. The whole point of Bitcoin was to automate the money. I could go on and on about scam after scam that we've seen in the crypto industry. But all these scams, all these crypto projects, all these exchanges and so on, run by BZ and by Bankman-Fried and so forth, none of them have anything to do with Bitcoin. We have to distinguish Bitcoin, the asset, and the exchanges and the lending platforms. The exchanges and lending platforms are their own thing. They're not Bitcoin. They might trade Bitcoin, but Bitcoin is its own thing. It's an asset. And we also have to distinguish between Bitcoin and the other cryptos, almost all of which are scams or highly suspect and don't operate on a sound basis at all. The sad truth is Bitcoin's success has attracted all manner of con men, grifters, and fraudsters, to include multi-billion-dollar hedge funds which have no understanding or appreciation of Bitcoin, but who want to capitalize on Bitcoin's success and victimize people who have no clue, who haven't educated themselves. Anthony Scaramucci was a victim of Bankman-Fried also, which tells me that Mooch really doesn't understand Bitcoin, hasn't put in the time, hasn't studied it enough.
Joining us right now is Anthony Scaramucci, Skybridge Capital founder, CNBC contributor, and somebody who had sold part of his business to Sam Bankman-Fried. Anthony, it's great to see you, sir.
But the bad news is, and I'll say this very candidly to everybody, I liked and trusted Sam, and that violation of trust didn't go just to me, but 20 plus venture capitalists, people around the world that trusted the brand and trusted the technology. You've done damage to this industry. You've done damage to the people in this industry and the account holders that trusted you. So enough is enough. Don't let a charade go on.
Kevin O'Leary, Mr. Wonderful, is out there shilling altcoins. And so is Mark Cuban. So now here we are. The cascading collapse of sham DeFi crypto projects, NFTs, sketchy lending platforms, and exchanges has contributed to Bitcoin's downward price drop in 2022. Altcoins are wiped out for the most part, and deservedly so. Thank God, in fact, the faster these altcoins disappear and are wiped out, the better. I'd be happy to see Bitcoin drop to $10,000 or even $5,000 if we could just flush out all this altcoin garbage. What we really need is a great cleansing. Have these frauds and scams hurt Bitcoin, damaged Bitcoin, tarnished Bitcoin's reputation? Yeah, sure. Sure it has in the short term, because the media and the general public just lump Bitcoin in with the rest of crypto. They don't distinguish. It's sort of like not distinguishing between Microsoft and Pets.com. In the long run, Bitcoin will be helped by a great cleansing of the crypto world. I don't even consider Bitcoin at all part of the crypto world. But all these crypto scams have understandably confused people. Many people have been hurt badly, including Tom Brady, and many little people. Nothing fundamentally has changed in Bitcoin because of all these scams and fraudsters and Bankman-Fried and so on. There's no such thing, by the way, as Web3. That's another scam, but we'll talk about that at another point. But meanwhile, nothing has changed fundamentally in Bitcoin. More users continue to be added to the network every week. I always tell people, do not invest any significant amount of money in Bitcoin until you've put at least 100 hours of study into it. I've put thousands of hours of study into it. I've written a detailed book about how Bitcoin works, the mechanics of Bitcoin, and why Bitcoin is valuable, and why I think Bitcoin will continue to increase over time in value. And I believe at some point will become the world's money, or at least an alternative, or truly viable alternative to the corrupt fiat money printing system. And I also have videos on this channel about how Bitcoin works and why Bitcoin is the only thing that has a chance to save your freedom. Because whoever controls your money controls you. And because I've studied Bitcoin so thoroughly, I'm not bothered by the big price swings. This is what happens in emerging technology. And when there's an emerging technology like Bitcoin, it's only been around for 13 years and people are only really aware of it maybe since 2017, that is most people, you're going to have violent price swings. So if Bitcoin drops to $10,000, my confidence in Bitcoin will not be shaken, not in the least, because of my knowledge of the asset, because I've put in the study, I've put in the work. Do not invest in anything until you really understand what you are investing in. Put the time in. Otherwise, you're not going to be able to psychologically and emotionally survive the inevitable big price drops. And do I believe Bitcoin will come back? Absolutely, because it's unique, it's much needed, it's a fundamentally sound asset. Not only will Bitcoin come back, in my opinion, it will increase exponentially in value in the coming years. Just my personal opinion, not investment advice, just my personal opinion. Can I give you a time frame for that happening? No, I can't, because short-term price fluctuations depend on so many factors in the macroeconomic environment that have nothing to do with Bitcoin. You know, there's going to be other Bankman-Frauds that come along that are going to tank the crypto market, and the price of Bitcoin is going to drop also. But here's the bottom line point. Bitcoin has nothing to do with the world of crypto, which are almost all scams piggybacking on the success of Bitcoin. Ethereum, Solana, Cardano, Avalanche, all these other altcoins that you might have heard about were all launched with venture capital. They're all companies. They all had large pre-mines where the founders and the initial investors were awarded the bulk of the coins. They then held initial coin offerings, which are like stock offerings. These altcoins are businesses. They're not decentralized. And they're using initial coin offerings, ICOs instead of IPOs, as a way to try to circumvent securities laws. And the SEC is starting to look into all of these operations, and I wish the SEC would move a lot faster. These are companies, and they're doing offerings of securities, initial coin offerings, and they should be cracked down on by the Securities and Exchange Commission. A lot of these people should be put in jail. Now, Bitcoin, by contrast, has been classified by the U.S. government as a commodity because it's so decentralized. It's a commodity, meaning it's similar to gold or silver or copper, because Bitcoin is not a business. Bitcoin is not owned or controlled by anyone or any small group. There was no initial coin offering. There was no pre-mine. It was never designed as a business. And it's decentralized. It's not under the control of anybody. It's just an automated protocol in cyberspace. And it's governed by a worldwide network of more than 1 million miners and nodes. To make any changes to Bitcoin requires a 95% approval by all the miners and nodes. So no one controls Bitcoin. This is what makes Bitcoin so unique. No other crypto asset has been able to achieve this level of decentralization. Every other crypto asset is controlled by humans who are corrupt, who are prone to greed and crooked behavior. Decentralization of the network, of the Bitcoin network, with more than 1 million miners and nodes spread out around the world, is a big part of what makes Bitcoin so difficult to attack and destroy. China tried to destroy Bitcoin. China outlawed Bitcoin mining and Bitcoin transactions in the summer of 2021. At that point, about 60% of the world's Bitcoin mining was in China. After China's crackdown on Bitcoin miners, Bitcoin mining plummeted to near zero in China. The global Bitcoin mining hash rate also plummeted. But as you can see on this chart, the global Bitcoin mining hash rate was back to where it was within a few months. In fact, Bitcoin's mining hash rate is now near at an all-time high despite the recent decline in price, which means more miners are being added to the network each week and each month, which tells you where the miners think the price is heading. They're piling up Bitcoin, is what they're doing. Bitcoin mining is even coming back in China. About 20% of Bitcoin mining is now happening in China. So China appears to have given up on cracking down on Bitcoin. It's just too much trouble, apparently. So that's the power of decentralization. Even the government of China, a pretty big country, the biggest country in the world, and it's a communist government, even the government of China gave up on trying to crack down on Bitcoin mining, or at least on actively cracking down. The more decentralized a network is, the more difficult it is to attack. That's why it's so difficult for a conventional military to defeat a guerrilla army. We found that out in Vietnam. The Soviets found this out in Afghanistan in the 1980s. Putin's now finding out this in Ukraine. Ukraine's using a combination of conventional and guerrilla military tactics. Ukraine seems to be winning. Decentralized networks are very difficult to destroy. There's no specific target to bomb or destroy. There's no Bitcoin headquarters. Bitcoin is just a distributed ledger on more than 1 million computers out there. There's no place for the IRS to go and audit. There's no place for a court to send a subpoena to. There's no one to arrest. There's no headquarters to bomb. So it would be very difficult to destroy Bitcoin, as China found out. By contrast, destroying Ethereum would be very easy. Terrorists could just kidnap Vitalik and torture him until he gives them all the ETH they want. Or Amazon could just push a button and destroy Ethereum because Ethereum is a centralized network. Bitcoin is the only truly decentralized digital money. Bitcoin is the only unconfiscatable money. Bitcoin was not launched with venture capital. Bitcoin is not owned or controlled by anyone or any small group. Bitcoin is the only money that is not issued by a government or by a corporation. Bitcoin is an open source software protocol in cyberspace that distributes a synchronized ledger of transactions to more than 1 million computers, that is miners and nodes, spread out around the world. Anyone can participate in validating transactions who wants to. Just download the Bitcoin software and participate as a validating node. All transactions can be watched and tracked as they occur, live and in real time. The entire Bitcoin blockchain can be audited back to the first block, the Genesis block, which was mined on January 3rd, 2009. Nothing like this happens with any other crypto asset. Your Bitcoin is unconfiscatable money. But for your Bitcoin to be unconfiscatable, you must not leave your keys on an exchange. The last thing you want to do is trust the Bankman-Frauds of the world and CZs of the world with your Bitcoin. If you leave your Bitcoin on an exchange, even if you leave your Bitcoin on an apparently honest exchange like Coinbase, which is a U.S. company regulated by the SEC and so forth, you're at great risk of losing your Bitcoin at some point. You could fall victim to the next Bankman-Fraud, or the government might take it, or Coinbase might fail, might go bankrupt. Or a thief at Coinbase might steal your Bitcoins. Or your Bitcoin can be frozen and seized if you're in a civil lawsuit. None of this can happen if your Bitcoin is on your private keys that you control and that you hold in a cold storage hardware wallet. Not your keys, not your coins is the rule. Not your keys, not your coins. If you buy your Bitcoin on Coinbase, you're buying Bitcoin with Coinbase's keys. Those are not your keys. Now, I do actually use Coinbase to buy my Bitcoin, but then I immediately move my Bitcoin off Coinbase onto keys that I own and that I control. Remember what Bitcoin is for. Bitcoin is your insurance against economic and political system collapse. If all hell breaks loose here or wherever you're living, you need to be able to carry your wealth with you to wherever civilization might still exist in some form. Take custody of your Bitcoin. Don't trust anybody to protect your Bitcoin. That's the entire point of Bitcoin, to take humans out of the money. With Bitcoin, you don't have to trust anyone else to protect your Bitcoin. You don't need to trust a bank. You don't need to trust an exchange. You shouldn't trust these institutions. With Bitcoin, you are your own bank. Bitcoin allows you to be a sovereign individual, a free person, under the control of no one but you. Because remember, whoever controls your money controls you. If you liked this video and found it useful, please hit the like, the subscribe, and notification buttons. Leave a comment if you have time. All this interaction will send a signal to the algorithms to spread this video and this channel to other people who need good information about Bitcoin and how to protect their freedom, how to protect our freedom. Also, check out my book on Amazon and subscribe to my Bitcoin weekly report at bitcoininstitute.net. Well, that's it for today. Have a wonderful day and hope to see you back here for the next video.